One of the things that's important to consider with equity release is, are you going to need to pay it off, or are you going to want to pay it off in the future? Now, first things first, I mean, equity release is designed to be a lifetime mortgage. I'm not talking about home reversion here, that's a different sort of product, but for the lifetime mortgage, which is the majority of equity release now, it is designed to last you until you die or go into long-term care, at which point there are no penalties anyway. But people get inheritances, come into money that they weren't expecting, their plans change, and you know, quite often we're faced with the thing of what happens if I want to pay it back. So a lifetime mortgage is a mortgage. You can pay it off at any point. You still retain 100% ownership of the house. The lender has a charge on that house. Most lenders have a penalty structure in place. This can last 8 years currently is the shortest term for penalties. 15 plus years is not unusual, and there are lenders out there who still base their penalty structure on the stock market, but that's best had as a conversation with your advisor directly, because it's quite complex in how it works. Most lenders have a facility where you can make regular overpayments. Some are more restrictive than others. Some allow you to make unlimited payments throughout the year. Most are capped at 10% of what you've borrowed each year before you get into penalties. So if you've borrowed 50,000, you can pay back 5,000 each year with no penalties. That amount does have to include the interest, but what we can do is have a look at your thoughts and objectives. We can have a look at your income and outgoings and see whether there's scope to make those payments. The real key with that is that it will help to keep a handle on the compound interest, which will mean that the equity that you've got in your property is eroded less, meaning that you've got more to rely on in the future should you need to borrow more, or rely on that money to pay for care costs later on. There are a couple of circumstances where early repayment charges don't apply, as we touched on at the start of this video. One is if you're a couple and one of you either dies or goes into long-term care, then the other generally has a window of opportunity to sell the property or to repay the loan with no penalties. Now, a lot of lenders restrict that to 3 years. Some people it means that the penalties cease to exist altogether. But you know, this is one of the things that the advisor will talk to you about. It's worth looking at your situation as a whole and trying to anticipate what you might want to do in the future in different circumstances.